Hello and a warm welcome to this analysis of the Nifty Mid Cap 100 Index. Now, last week I had done a analysis on Nifty Small Cap Index. If you missed it out, it's the link to that is in the description box. Now, let's start with the Mid Cap Index, and as usual, let's me start with the quarterly charts. 2001 list entry could rally till 2008, then a subprime correction which is around 62 to 78%, then a beautiful cup and handle structure formation from there till 2013 July, and then another takeoff till 2018 January, and then the COVID correction, the 2 years of correction we had in it, and from since then a very decent strong rally. Now, if you look at the Fibonacci retracements, the first correction to subprime is between 62 and 78%. From then the 2018 to the 2020 correction is 50% of this move. The cup and handle move did 2x return of the entire structure. And then from the COVID lows, if we take the 2009 lows, we've already at a 1.6 Fibonacci at 41,300. We're very much sustaining much over that in the quarterly charts, and further push would take it towards 48,500 in the quarterly, what the quarterly charts tell us. Let's have a look at the monthly chart. Now, in the monthly, again, it's this trend line from the 2010 highs in the monthly has seen rejections once in 18, once in 21, and now, even though the monthly is November, we saw it, but the quarterly chart would be more interesting to see how it behaves near this trend line. If it continues to do well above the trend line in November, December, which is also the quarterly chart ending, then the next resistance comes up immediately at 45. That would be a medium term, and the longer term would be near 48,000. So all is well till we are above this trend line. As per Ichimoku, both the monthly and the quarterly charts are not showing any weakness, and the graphic environment equilibrium seems to be in very good shape currently. Let's have a look at the weekly charts again. The similar kind of a cup and handle which was formed in 2000, between 2008 to 13, 5 years, has formed in the weekly also from October of 2021 till March of 2023. Significant. That's the only correction we have seen from COVID lows in this index. Significant one, both in terms of time and not so much in terms of price. And yes, in the weeklies, it's training above it, but weekly is too early to call a quarterly, monthly resistance line. So again, if it pushes 45 and this graphic environment showing everything perfect in the weekly. Let's have a look at the daily. Absolutely in terrific shape, and we can see from the October end lows, it's given at a super duper rally, cruising its way up right now out here. So where are the supports? Again, the earlier support, yes, in the daily time frame, 42,000, but it is better to look at that in a weekly time frame. Daily would be, yes, bigger support is much lower, near 41,500 to 40,000. 42,000 can be tested and again push back if it's an uptrend, just to set up some bear traps out there. Yes, in the weekly, if it starts sustaining below 42, then it would be a caution to retest the daily supports. Or if in the case of the weekly, the support comes in at 38,700, resistance right now 45,000 in front of us. Let's have a look at the monthly. The monthly one is also well placed. Support is quite deep down at 35,000. Above 45, we have 48,000 as our next line of resistance. So, at a juncture which is trying to, you can call it trying to break on the upside after three attempts, that is 2010, 2018, 2021, now trying to break on the upside. If that happens, that means the index can get much more stronger going forward. So it's wait and watch for the December. One can without any sign of weakness. So just a level where I would be very cautious, 42,000, and otherwise keep on cruising on its way up towards 45, where again I'll look at some pause but by that time we will be well above the trend line, which would then mean that yes, it could open up for 48,000 also in that way. Otherwise, we know the downward levels which can uh, come up for this stock. Now, unlike the small cap index, this mid cap index, which comprises of stocks beyond the Nifty and the Nifty Junior Index. So the after the first 100 stocks which are there of the near in the indexes, the rest 100, which is has some non-FNO ones also, but star performers in that PFC, RECL, and so on, which have given tremendous returns in the year 2023. So strength factor coming from there. Yeah, like coming back to the correction part of it, unlike the small cap, this index does not do a huge correction. It tends to do much in line with Nifty and tends to marginally outperform Nifty all the time. So right now, from the COVID lows, the Nifty is at a 3x return. So is this index from that low. So almost mirrors the Nifty move. And the only exceptional time where the index was underperforming the Nifty was from 2018 to 2020, when Nifty went on to still rise, but this index continued to underperform at that stage. So currently, yes, in the short term, it is outperforming the Nifty, as can be seen from the COVID lows. But overall, it tends to match up and keep in line with it. So these are the important levels in front of me, which I wanted to share with everyone. Please note, this is not a trading advice to you. It's a educational video based on Fibonacci, harmonics, and the Ichimoku. Kindly do your research properly before coming to your conclusion. I hope this video is of help to you. So please do like it, share it, and do follow me for regular updates on stocks and indexes. Until then, happy investing, everyone.